Good day, everybody. This is Michael Levitis with Alpha Insider, and we're a podcast which brings you different experts in various fields to educate the public on what's out there, how the experts can help you, to educate you. And my next guest is Boris Glickstein from Matrix Capital Group. Boris, welcome to our show.
Michael, nice to see you. Thank you for having me here.
My
it's
pleasure.
great to be here always on Alpha Insider. I'm watching your programs and very, very interesting.
I appreciate it. And we try to keep it interesting and look, very frank. So we're going to talk honestly. Look, the reason why I invited you back, and I had you on before to talk about different financial products. We talked before regarding what you do for the public for cash advances, hard money loans, refis, construction loans. Basically, you're in the business of getting people financing in different forms from different assets that they have, be it business or property. Now, you came up with a new product. Your company has a new service they can offer, and you said it's very hot. Now, I know nothing about this one, although I do know mortgages. I know other financial instruments. This is new to me. This is home equity investment, HEI. It's a new instrument, new product in the market. So I want to ask you how it works. What are the benefits? What are the negatives? What are the cons? We're going to talk very frankly and pretend I don't know anything about it because I do not. Tell me, please, what is it?
So I'm sure you're familiar with the product HELOC, right? Home equity line of credit, right?
Yeah.
It was popular, you know, a lot of people used it. Banks were giving it away as a secondary mortgage, right? To your primary mortgage.
Mm-hmm.
And obviously when the rates were, you know, friendly, you can step into any traditional bank, apply if you haven't sufficient income. And your credit history is good, you can obviously apply and get the loan, right? From Chase, Bank of America, so on and so forth. With what's going on in the world, economy-wise, pandemic, banks became very hesitant to provide that kind of a HELOC loans, right?
Okay. Mm-hmm.
So imagine the scenario, and I'm sure a lot of people can relate to that, that during the pandemic, a lot of people just simply lost their jobs, right? Lost the income, right?
Mm-hmm.
And probably, I'm not going to say, I don't know the percentage wise, but I would assume a lot fell into the forbearance plan on their first mortgage, right?
Right.
So
or even foreclosure, who knows?
Or even the foreclosure, exactly right.
Mm-hmm.
But what happened is a lot of those people, families, owned the house, you know, long time, they bought the houses a long time ago, or the condominiums.
Right.
So with the real estate market, you know, pricing skyrocketing, going up, they have substantial equity in the house. But because of no income, because of their credit, they cannot access that equity. So we came up together with, you know, banks, several, it's not even the banks, it's hedge funds, okay, it was institutional investors.
Mm-hmm.
We came up with a program where we really not looking at people's credit.
Okay.
We understand it's a hardship. We're not looking at their income. We understand they might not have any now, right? But what we're concentrating on is their equity in their property. Okay, so it's either it's a primary residence or secondary residence.
And just to clarify for people, equity is the value of your home minus how much mortgage you owe on the
correct.
home. That is called equity.
Right. The positive equity, which is the amount of the money between the balance of your first mortgage to what is it appraises at now, right?
Okay.
So we came up with this product where we can offer to people, again, as I'll repeat myself, as a primary residence owner or secondary residence owner, as long as the deed is under your personal name and not under LLC or corporation. Okay, we can provide you up to 80% of loan to value of combination between your first mortgage and our product.
I see.
So 100%, let's say $1 million, you have a balance of your first mortgage over $500,000. So somewhere between $250,000 to $300,000 you're able to access based on the equity of your property.
Understood. Okay.
So far so good, right? I mean,
Mhm.
because you cannot go to the bank based on the criteria that I said, people have, they just can't access
So
it.
you can't cash out the whole equity. You have to leave 20% in
Correct.
the house.
Correct. Absolutely.
Okay. Got it.
So actually right now, and I'm doing the investment property mortgages for people who buy properties as an investment. And I still can actually close the loan today at 80% cash out, which is unheard of because, banks go to 70, 65%, so that's where the limit is. So let's get back to this HEI program.
Right.
So we already established who primarily might be looking to use it, right? People with no credit and no income. Right. Now I also have a second.
Bad credit.
Right, but I also have a second wave of people who became very interested in it. It's actually real estate investors. Okay, because in actuality, let me give you the punchline right now. So if you get this line of credit, as a traditional line of credit, you understand that you have to pay monthly payment, whatever the interest is, correct? In this product, there is no monthly payments. You have up to 30 years to repay this amount.
Okay.
Or either you sell it whatever you sell it, 5, 10, 20 years, doesn't matter, 3 years, right? So when you're selling it, you have to repay. Or if you decide to live in your property for the next 30 years and never sell it, that's, at the end of the 30 years, we would want to collect our money. Now, how do we collect? And what do we collect?
Exactly.
So let's say we gave you $250,000, right? Or whatever the amount is. We based our pay on the future appreciation of your property.
Okay.
So we have an appraisal. Let's say we appraise the property at $1 million, correct? So any future appreciation in the next year, 2, 5, 10, 20, 30, there's an algorithm that will calculate that based on your area, based on your property, kind of property you have, and we'll come up with a certain number that if your house appreciates, I don't know, 30%, right? Out of that 30%, we'll become partners with you for the 15 or 20% out of that 30%.
And when you say partners, is that 50-50?
No, not 50-50. We have the lesser interest in that appreciation amount. Okay. So let's assume that the total property appreciated by $500,000, right? We're not getting 250. We might get 100, 150,000 on top of what we gave you, right? But
so that's your interest. Let's put it this way. It's not really interest.
It's not interest, right? But that's an interest. That's our interest in your property.
It's basically you're making an investment. You're becoming
correct. That's why it says right
in this property. So do you now become a part owner of this house?
We only become part owner on the amount that we gave you. So we take second position. We don't take first position as your primary mortgage, right? Sometimes, in some cases, we also go to the third position, as an investor in your property, right?
So I assume you add your name to the deed in the proportion.
We have a lien. We have the lien either in the second position or the third position.
Fine. And you said the amount of your interest in the property varies. It varies by the property, by the neighborhood.
It varies by the It varies by the property. It varies by the cities. It varies by area where the property is located. There are several things go into that algorithm, how we figured it out, but it's all in black and white. There's no hidden fees, nothing.
Good, that's important.
So the way the system works is that if somebody contacts me, I will send them the link, right?
Mhm.
It's called pre-pricing link, pre-approval link, okay? Get a quote link. And they start putting their name, their address, some, information. And then, the system will come up with a certain number, right? So this is what
And
we can
Boris,
give.
what is the range of these numbers?
Okay, so we can go from 25,000
Okay,
up to $500,000. The max we'll do is $500,000.
gotcha. And what is the range of how much interest would you take on this money?
It varies. I mean, I've done properties at 15% interest on the total income up to over 50% interest. Okay.
This is actually a very good program for somebody who cannot afford monthly payments right now, but they feel like their house will appreciate in the future, but they need the money right now. They have no other source where to go. They cannot go to a traditional bank.
Right.
And only once you make money on the house, when you sell it, that's when you pay back.
But also
what happens? Yeah.
If the house loses value,
that's my question. Okay.
we lose also. We're not asking anything on top. So let's say I gave you $250,000 and the house lost value, whatever the percentage is. I will take a hit from the 250.
Got it. So you're not going to go after the homeowner personally. Okay.
No, absolutely not.
That's
why your credit. Listen to this. Your personal credit history. We're still going to run the background. See who you are. If we'll check that. But it's not gonna. Your credit is not gonna make a difference or influence the offer, right? So, but we would like to go not below 500. So 500 or above, you're our client.
Got it.
Even if your house right now is in foreclosure or in forbearance,
okay,
we will make an offer. Okay, we'll analyze it on an individual basis, but we will make an offer. Even if you have a home equity line now, we can pay that off.
Got it.
And give you, if there's anything extra, you keep.
Yeah, because if you have home equity now, you got to pay monthly. If you can't afford the payments, you may switch to your program. Granted, in the end, you may pay more with you.
Correct.
But you're going to have that cash flow because you're not going to have to pay monthly payments.
This is all about cash flow.
Exactly.
A lot of people are missing a cash flow and they cannot access it through the traditional way. This program was created specifically for that.
It reminds me a little bit of reverse mortgages.
It's not. I know you're going to say that, but it's better than reverse mortgage. Because in case of reverse mortgages, we made a comparison, okay? And people who, by the way, people who had reverse mortgages, we offered them this program. And they were able to get rid of their reverse mortgages.
Would you be able to make this analysis for people? Somebody comes to you and says, listen, I have these options. I can go for a loan possibly, I can get a reverse mortgage, or I can go through you. You'll be able to give them like a breakdown, what works the best for them?
Absolutely. Because reverse mortgages, they pay you monthly on the monthly. They don't give you the lump sum. I give you the lump sum right now.
Okay, understood.
Now, if you want to use that lump sum to renovate the house, it's up to you. If you want to pay off the debts, credit card, that's up to you.
You don't care where it goes.
I don't care what you do.
As I hear you, as I listen to you, I see besides people who want to get out money right away from their property for whatever reason, this is also a good program. Can you use this when you purchase a home? I'll explain to you my question. Let's say you're in the business of flipping homes, buying, rehabbing. Can you take advantage of your program to take out money to rehab the house, then sell, and then you guys share in those profits?
100%. That's what I wanted to tell you. Investors, real estate investors,
it's perfect
use that. Absolutely.
Perfect.
And here's a good thing. If you will repay, first of all, so if you repay us within the first 3 years, we don't use the percentage appreciation of your property. We have a cap.
Okay.
So there is certain, let's say on $200,000, there's a certain amount of cap for the first year, second year, or third year, right?
I see.
It only goes into the appreciation mode after the third year.
So what happens
So-
the first 3 years?
It's a cap payment which benefits the
Oh,
borrower.
okay, so you know exactly how much you're gonna pay.
Yes, it will be disclosed to you. Absolutely.
Very good. So
Okay.
somebody who buys homes for flips, they usually buy it for 1 year, they renovate, they put it in the market, they make the money.
Use the money.
I mean, the way I see it right now, this is a perfect program for somebody
Right.
who doesn't have a huge capital, wants to get into business of flipping homes. Yes, they have to share with you in the profits,
Of course.
but at least
But they don't have
the
any other.
profit.
But they don't have any other way to get the
Exactly.
capital.
Exactly.
You
yeah.
understand? So if we compare this to the hard money, right? Hard money loans,
Right.
as people understand. First of all, the hard money loan, you cannot go to the hard money lender, and if your home is your primary residence, they're not going to give it to you because the hard money lenders only give money to the investment properties if it's under LLC or corporation, right?
Right. Yeah.
So we are accessing right now people who are not in the real estate business who have to save their primary residence. You understand?
Yeah, speaking of that, you know who else this is good for? Let's say you own a home, right? And it has equity. You want to sell this home. However, you realize if you renovate it, you could make much more money on it. You can take your program,
renovate it,
use the money to renovate, then you sell the home, you make more money. Yes, you got to pay you, give you a portion, but in the long run, you will make more money.
Absolutely. So let me tell you the process so people will understand that it's very simple. So once they'll get a link, they'll contact me. Once they'll get a link in there, everything is done through the email, okay? Because people right now don't want to communicate, no talks, no phones, emails,
everything through Zoom.
Correct.
Now.
But I'm keeping an eye on everything that's going on with the file. So once people get the link, they will fill out certain information, right? They will have to provide their social security number just for the background check, okay? Not for their credit or income. Then they will, digitally sign the application, right? There's a couple questions if they've ever been convicted, whatever the questions are. Hit submit, it goes to the system, right? It automatically generates another email to them where they have to upload certain documents, such as their current statement, mortgage statement, if they have a HELOC, statement, similar small driver license, stuff like that.
Everything's done through the system.
Everything upload into the email, hit submit, it goes to the underwriting process. From the underwriting process, they will generate a final offer with the numbers that we discussed, appropriate to their property. Then it goes to the committee for the final approval. And once it's approved, here's how simple it is. You don't have to go nowhere. A person comes to your house with a package of documents, right? A notary public guy. You sign it, and in 24 hours you get a check if you get a check.
And Boris, on average, how long is this process of getting approved for this thing?
If the deal is simple and there is no other liens on the house, so if there are liens on the house, we'll repay them from the closing.
Right.
Okay. We'll pay it ourselves to, or if there's any judgments, that's why we run the title. We have to, obviously we have to see the title. So if it's simple, no liens, nothing, I've closed the deals within 2 weeks. If there's a little, complex, you can probably go 30, 35 days, up to 40 days.
Got it.
But it all depends on how fast the borrower will react to the email or to the request that we need. You understand?
Okay, it sounds even quicker than a regular closing. Because regular closing could take 2 or 3 months.
Right now, regular closing will take long time.
Takes time. Boris, what are the closing costs associated with this?
Okay, so I'm not going to go into numbers, details right now. Again, everything per property will be disclosed in the papers.
Okay.
We take very little percentage-wise. You understand? Because again, it's not a mortgage, it's an advanced HELOC, stuff like that. Obviously, there are fees, but they're irrelevant to the amount of the money that you might be getting
But the
And
fees will be taken off the amount that the client
yeah,
is
you
getting.
don't pay
So
you don't pay
nothing out of pocket. Okay,
nothing.
good. And all the fees will be disclosed in the statement. The client is going to
Correct.
know exactly what they're
Absolutely.
paying for what. Okay,
Absolutely.
that's very good.
It's a similar
It's
to
very
a
good
hot
to have transparency.
it's a similar to a hot statement. You understand?
A
So
closing statement.
everything, but
Gotcha.
everything is online. Absolutely.
Boris, in what states do you operate?
Okay. So we operate in most of the states.
Okay.
Obviously in Florida, obviously in New Jersey, Pennsylvania. We're not in rural areas yet.
Okay.
Okay. So upstate,
Are you in New York?
I'm in, yes, absolutely.
Yeah, meaning you can do this program in New York State.
That's correct. Brooklyn,
Oh,
Long Island, whatever,
gotcha.
Queens. So I get a lot of phone calls
Mhm.
with from people from those areas. And by the way, how powerful this program is, I don't advertise nowhere. This is not advertising. This is explanation and stuff like that.
Yeah,
it's
look,
word of mouth.
we are educating people on what's out there, so people can make educated choices when they decide what way is the best to get money out of your house.
Correct. And by the way, once I'll send you the link, and once you'll fill out the form, and once all that goes into motion, you're not obligated to do anything until you sign the final offer. You will accept the final offer online. So until then, entertain yourself, learn.
Listen, Boris, this sounds like a very viable and real choice for people who are looking to get money out of their home for whatever reason, like we discussed, for construction, renovation, pay something else off, or they just need money for something else, to pay off a debt, to buy another business, what have you. It's not for everybody. It's a choice you have to make.
It's not for everybody, because people say, sometimes I hear, well, why would I want to share my equity later on? I said, my friend, you don't have to do absolutely anything. It's not for you.
If you're a high net worth, if you're a high income individual with an 800 score, probably this is not for you.
It's not for you, but at the same time, you cannot go to the bank and get a regular HELOC. The banks right now shut down. They don't give money as they used to.
Right.
So anyway, even if you have and you want to get out money from your property, that's what it is. And a lot of people say, listen, I'm going to live in my property till my last breath. God bless you. What's going to happen after that? What's going to happen with the property? It's the same procedure as a foreclosure. They file for the foreclosure and they get their house when they sell.
It's basically whether you want the money right now or you want to wait until later. So that's the analysis you have to make for yourself. Absolutely. What's more important for you, cash flow or getting money out right now? And all that, for all that information, for to have a proper analysis, you can call Boris at the number we're going to have at the bottom of the screen. You can also message Boris on Facebook. We're going to tag you on our Facebook pages. Cool. Or you can leave your comments below. Boris, thank you so much for so much valuable information, for your services. And please follow our pages, because we're going to keep on bringing you various experts in different fields to educate you so you know what's out there on the market and make the right educated decisions.
Michael, thank you so much for having me. I hope this was informative, and a lot of people will get use out of it. Please call me, email me with any questions, and it will be answered.
Thank you very much. Thank you for your time. Have a good day, everybody. Bye-bye.
Ciao, bye-bye.